Yeehaw. What's up, YouTube? Hope you're all doing great. Good morning, friends. Welcome back. I hope you guys weren't too terribly leveraged up the last little while. The last ETH update I made was quite some time ago, and it was by design. I was mentioning that the frequent updates would stop, and I would update you when something significant materialized. And so you can call that random, or a lucky guess, if you will. But ETH did a little bit of a doom drop here on Friday. People calling it a black swan. I prefer that dip happened quickly and just get it over with. And you guys seen that people were liquidated and a lot of money was lost because, you know, they're not even following the most basics of TA. And they're allergic to the weekly and monthly chart. They just are. And they get lucky sometimes, and they get a big following. It's a sad state of affairs, and my prayers go out to everyone affected. So, you know, the show goes on, and, you know, it's just money. You gotta just think of it like they do. It's just money. Don't be so emotional. So I have not changed any of these levels. So you can see that they're respected quite well. And the support and resistance that we get from them are quite handsome. So we do have a double bottom here on the futures market. I'm going to put this on the chart. Now, the reason why is because, and I wanted to give it a couple days just to see what went on and what the sentiment's like. There's lots of people that have already decided to go turbo leverage, and there's a bunch of knuckleheads echoing that all over Twitter, and it's just be spot. Altcoins are already leverage. Like, you just gotta sit there and wait. That's it. So yeah, still above support. and I do use classical support and resistance because it clearly works very well. But I don't really pay much mind to it in the lower time frames. And as a matter of fact, when you're in like Ethereum and altcoins, you shouldn't be in the lower time frames ever. You want to do well in those assets, then you stick to your 3-month chart and you go to the essentials playlist, free on my YouTube, and go and hunt those models in the 3-month chart. And you're going to take way less trades, but you're going to make a whack ton more money. Go back test. Those things repeat and they're phenomenal. So here we are, and we got this information, okay? And we're above some actual nice support levels. I'm just going to take a peek at the daily chart and see what happened. So we did have like this bull flag channel thinger, and then it came and stopped everybody out, just wham, and then it looked like it was going to break market structure and rip up and slam again in your face. Man, I'm not going to say that like I know this for certain, but we had a cancellation of NFP this month. So the government shut down, delayed NFP on the first Friday of the month. And this is where we typically get that doom drop, is the first Friday of the month. You can have that for free. And it was delayed until the second Friday of the month. And I was like, okay. And then so it was tentative up until like Thursday evening, Friday morning on the Forex Factory. And then it just disappeared. So in my humblest of opinions, the bottom's in and we continue up now. However, that double bottom bugs me. It just gives me the creeps, okay? Because everybody's like, oh, take credit cards out and, put some more leverage on and more. You guys are just, ugh. But they're the ones that are going to make this thing drop. And if you were sidelined and you were begging for a dip and you didn't press the buy button, you got to press the buy button. Not financial advice, but that's what you do. You buy low. You don't be scared that that's a sell off. That was a bank run. And it was timed. It was just delayed exactly 1 week from when we were expecting. And if you're a Discord member or a private student of mine, you all know, and here I'll teach you this one too. When you get a month that overlaps in the middle of the week, expect the timing to be a little bit screwy if you're running time-based candles, okay? So, typical that a bull flag would get stopped out before it goes the direction it's supposed to go, right? Like, why wouldn't it? It just does it more often than it doesn't. It doesn't really do it down here. Like, once you've taken the major pool of liquidity, that next bull flag's phenomenal. This one here, again, stop out, right? So let's just go over this, because this is the same thesis that we've been running since the bottom. And I want you to go back into my playlist, ETH Alt Season Update, where we called this bottom in real time, told you where price was going in real time, exactly where it was going to likely go, based on nothing more than premium and discount liquidity pools. That's it. That's all I used. And trend. And all I did was forecast it. And it's not magic. Just get out of your 5-minute time frames, because you're not seeing nothing. So it's the same as everything else. You got these equal highs here where people have their stop losses. It just daps them a little bit right there and then slams down. So everybody was playing this bull flag here, gets rocked. Then it goes up and takes everybody's stops, but it falls shy of this double top here. Just like I mentioned it was going to. It was going to likely want to reprice above this high, but leave these highs alone, trade away from them, and then run them out. I wonder what it's up to now. So now that we're in the daily chart, this is where I'm going to pull the Fibonacci tool. Okay, and we're going to turn on just your standard retracements. Okay, just mind the midway point here. And that's your discount, anything below there. This double bottom indeed could play out and have the probability because it's in a discount. Your bearish patterns fail in a discount. Your bullish patterns are favored in a discount. Okay, so that could indeed play out very well. If we hold this purple shaded box, we go up. So that's going to be my support and resistance level for October moving forward into Christmas time. Okay, that specific price point. So if we lose that, I'm immediately aiming for sell side liquidity. Okay, I'm building you guys a plan of what I'm looking at when I'm looking at this. So right away, I noticed that the hedge funds that are playing the futures market, they were left alone for a little bit. And this is why I stopped doing updates. They were just pointless. I was anticipating that it was likely going to want to come and reach a discount. It's done that twice. And now we're finding sensitivity, and there is a ton of people calling it over. And we're going to go into the index chart where the weekend trading is recorded, and you'll see that it spikes these guys. Okay, so the people who play the futures, they've been saved, and they might have gotten out of, maybe, I don't know, probably not, but they were feeling really onside, and likely still are for the last couple of weeks. And those are the people we are primarily gobbling up. So let's go. Now the index chart is the closest to the futures chart, and that's what runs the show. So you can see that right there, spiking up and just binking that liquidity. We pull our fibs here from that low to this high. Now, when I did my last update, I was mentioning, I don't know if that's going to be the low it's going to want to choose. That's not my protected low. That's my protected low because it took all the liquidity here. Okay. So I will permit it to come down here if it wanted to. However, that's all it wanted to do. It just came and gave this sucker a tail and took off. So that's your discount, liquidity, or entry. And let's blast off to the moon. I'm ready. Are you ready? So you guys have the targets from the last episode, and if you don't have them, check it out. God bless you all. Thank you all for joining. Buy the dip and be safe.